What if I told you that one simple accounting report could save your business from costly financial errors, audit issues, and inaccurate financial statements? Whether you're an accountant, auditor, finance professional, business owner, accounting student, or bookkeeper, mastering the trial balance is one of the smartest accounting skills you can develop. My name is Emmanuel Nwazuzu, a certified accounting software expert with over 17 years of experience in accounting software implementation, system setup, professional training, business automation, data analysis, and business analysis. Over the years, I've had the privilege of training more than 7,000 students and successfully implementing accounting software solutions for over 450 companies, helping businesses improve financial accuracy, streamline operations, and make smarter business decisions. Today, I'll explain why the trial balance is the backbone of accurate financial reporting, bookkeeping, and business success. What is a trial balance? A trial balance is a report that lists every account balance in your general ledger at a specific date. Its purpose is simple: to confirm that total debits equal total credits. Think of it as your accounting system's health check. Before preparing financial statements, accountants use the trial balance to verify that transactions have been recorded correctly. But here's what many people don't know. Even if your trial balance balances perfectly, it doesn't guarantee that every transaction is correct. Errors like posting to the wrong account, duplicate entries, or recording the wrong amount on both sides can still happen. That's why experienced accountants don't just prepare a trial balance, they analyze it. Why is the trial balance so important? It improves financial accuracy. Accurate numbers build trust. A properly prepared trial balance helps identify posting errors before they affect your financial statements. It supports audit readiness. A well-prepared trial balance makes the audit process faster, smoother, and more efficient. It's strengthening internal controls. Preparing a trial balance regularly helps detect unusual balances, missing entries, and accounting mistakes before they become expensive problems. It helps business owners make better decisions. Business owners don't make decisions based on guesses. They rely on accurate financial information. Whether you're planning budgets, applying for loans, attracting investors, or monitoring cash flow, your decisions are only as good as your accounting records. And every reliable financial statement begins with a reliable trial balance. Where does the trial balance fit in the accounting cycle? Record transactions. Post them to the general ledger. Prepare the trial balance. Make adjusting entries. Prepare the adjusted trial balance. Generate the financial statements. Close the accounting period. The trial balance sits right in the middle of the accounting cycle. It's the quality checkpoint that ensures everything is ready before preparing the income statement, statement of financial position, and cash flow statement. Every stakeholder depends on reliable financial statements: investors, banks, tax authorities, management, employees, and customers. Accurate financial statements improve business credibility, support better financial planning, simplify tax compliance, and help organizations achieve sustainable business growth. That's why professional accountants never skip the trial balance. Remember this: no accurate trial balance, no reliable financial statements, no confident business decisions. The trial balance isn't just another accounting report. It's the foundation of financial reporting, bookkeeping accuracy, audit success, and business growth. If you're serious about accounting, finance, or growing your business, mastering the trial balance is a skill you simply can't afford to ignore. Follow for more practical accounting tips, financial reporting, bookkeeping best practices, audit insights, Excel for accountants, IFRS, accounting software tutorials, and business finance content.